I've always said that it's the greatest and easiest macro risk-taking environment of all time because you have one macro variable that matters and nothing else really counts. And what's interesting is long in an exponential thing like technology or crypto, time means higher price. It's the crypto people who've figured this all out before everybody else. And by the time we even get to next cycle, I think it becomes the all-in, everybody knows what the game is. The greatest macro risk-taking opportunity of all time because we now know the game. It's clear, and they're telling us it's the game, and that drives your asset allocation decisions so clearly. It's like it's the big one. It's the biggest thing we've ever seen.
Macro investor and Real Vision co-founder Raoul Pal is doubling down on his call for a massive crypto bull run that could last through 2026. He says all signals now point to a powerful acceleration phase, the setup that's historically driven huge market rallies. Pal believes Bitcoin dominance is topping out, setting the stage for a rotation into Ethereum and major altcoins, with ETH primed to lead. With Bitcoin near $121,000 and Ethereum above $4,300,000, he says this is just the start. If his liquidity thesis plays out, we're entering the banana zone where prices can go parabolic. Let's dive into Pal's latest outlook on why the bull run may be far from over.
It's just so clean right now to take these bets. As I said, it's the easiest macro risk taking cycle of all time because now we've got this two mega trends. Well, technology, which is basically, even we can take in the energy trade, it's energy, it's solar, it's robotic, energy, robotics, AI, and then we've got the crypto mega trends, and then I think defense is probably a mega trend, as you've said. And it makes it super easy. And once you throw in liquidity, things move. I mean, we've made so much money in Pro Macro and GMI out of just options because the velocity of the moves is so much higher than the option market price in. We've made so much money from fucking Robinhood to Coinbase to Tesla to you name it. The other one that was really good for us was Rocket Labs. We did that trade twice and we've made like 5 or 10x every time we've done that trade.
I like to look theoretically at stuff like that. And I've always said that you probably pay too much for downside protection in equity options, but you pay too little for the upside protection or the upside volatility wise. You typically see that skew, right, where it's more expensive to protect yourself rather than to bet on an outsized move in the opposite direction. So I think you're right that options are interesting when you look at these cases, even though, upfront it looks a little expensive, but it's not priced expensively relative to, this extreme right tail of the outcome space that we see in many of these cases that we've discussed.
Yeah, because, we will, and I don't think we're there yet, we will shift into bubble territory, whether it's this cycle or next cycle. We'll probably have one of the biggest bubbles of all time. And what that tells me, and George Soros used to talk about this, basically it tells you it's all right tail. And the market's going to underprice it, and it's going to give you a massive opportunity. I mean, bubbles are the most fun things if you can get them early. It's generally by people who've missed the trade. People are so cynical about the AI spend. Will we have excess expenditure at the end of it? Possibly, but maybe not. I mean, when you speak to Mark Zuckerberg, he's like, we're underspending. We simply can't build this fast enough. It's really interesting because here's two macro people talking about equities. And not in terms of broad sense, but we're in sectors and single stocks. It's interesting. A friend of mine works for one of the most famous hedge fund managers of all time, who's now family office. And he said, oh no, we turned into an equity shop years ago.
Yeah.
Because of the opportunity set that's happening because of technology and other stuff.
Yes.
So, the amount of bond bets or currency bets that happen is very small now. It's kind of like, it's been equities and crypto, which is what we've all got to. And what's also incredible about the whole debasement trade, it was a bunch of fucking crypto people who figured it out well before everybody else. The gold people had kind of got confused with inflation because they were very stuck in the 70s idea. And it's the crypto people who figured this all out before everybody else. And finally, people are starting to realize that this is the thing. And so I think, as you say, it's still early because I still have to explain it to everybody. And you hear the administration, it's really interesting to hear this administration because they've talked about, even Trump was out yesterday, he's like, we need to grow our way out of the debt. Elon, when he was around the administration, was like, yes, it's the robots and the AI, it's the only answer. Meanwhile, Scott Besson is basically talking about keeping the dollar weak, getting rates as low as possible, and he's openly talking about refinancing the debt, which is the whole debasement trade, and they're openly talking about what they're doing now. It's in plain sight. This weird perception that we're going into a recession and that we're late cycle, when in fact liquidity explains what between 90 and 97% of pretty much everything. There is a capex cycle going on that's raising GDP and government spending, but domestic ordinary businesses in the US are struggling because rates have been high. And so you've got this bifurcation, the domestic versus the internationals kind of thing, as you said. And that's caught a lot of people offsides as just misunderstanding that whole process. It seems that they're trying to move the game when people understand what the game is. So at first it was the balance sheet from 2008 until 2012, 13, 14. Then it became FedNet liquidity, which is all of those measures. And now they've gone to total liquidity, which is really right now being entirely driven by the private sector. But it's still liquidity. And I love the way you put it. There's 3 ways you can create a dollar. You need to keep your eye on all 3 ways. And there's also a certain amount of liquidity that comes from issuing short-end bills as opposed to long-end. It seems like that's a liquidity provider.
Yeah, indeed. And at first, the current administration, tried to at least rhetorically lament the bill issuance of the Janet Yellen Treasury, but they ended up doing the exact same thing, right? So they've utilized that as a liquidity instrument without any doubt, and we've, by the way, also seen that in global yield curves, and I actually think this is an overlooked mechanism. If you look at Japan and Europe right now, we're also seeing a large credit creation in those economies without the central banks really helping that trend, actually. And interestingly, if you look at the Japanese case, we've seen this massive steepening of the Japanese yield curve where long-term bond yields have been allowed to rise for the first time in a long, long while. And while it seems counterintuitive on the surface that when, Bank of Japan has basically pulled back from intervening against long-term bond yields going up, it has ultimately released the animal spirits of the Japanese commercial banking system again, because they were stuck in 1 or 2 decades of no carry. So they basically have a business model where they borrow short and lend out longer out the curve. And when the curve is flat as a pancake, they can't really make any money doing that, so they don't lend out. And as soon as this shift happened very aggressively, they started lending out in a way that we haven't seen in a very long while.
It's always been my impression that the global central banks completely understand what they're doing. Japan is always the leader in this for some reason, because of its population's older, I guess. And there's signal in what they're doing, which is saying they've all seemed to have gone away from using traditional methods to just going straight to the private sector and using the banking system. And Japan is doing the same thing by readjusting its yield curve. Yeah,
it is. And at the same time, we're obviously seeing this global trend towards removing red tape, removing capital restrictions, etc., for private banks, again, incentivizing them to do the heavy lifting on this liquidity creation. And I think that's essentially what a lot of people have missed over the past couple of years, that we've seen a move from central banks doing the heavy lifting themselves to instead incentivizing the private system to do it instead.
Why did they do it?
At least my initial thesis was that, they were scared in the aftermath of that inflation spike in 2022 into asking someone else to do the dirty job.
They can't be hung for it. So it's like, well, we're not doing it.
Therefore, they've incentivized the private system to do it instead. And I think that makes, for as long as we're running inflation above their target range, that's probably how they're going to maneuver this.
Oh, so their messaging looks consistent. It's like, we're not adding liquidity because we understand inflation. Meanwhile, they're like, hey, you guys over there, buy as many of these bonds as possible and create more credit on the back of it.
Yes, exactly. So ultimately, I think it's a result of what happened in late 21, early 22 with that inflation spike. And they're not willing to once again take the blame for inflation running a little bit above target as we are right now. So they're asking the private system to do it.
And that just tells you they know what they're doing.
Yeah.
Everybody calls the Fed idiots. But I've always figured that if you actually take the framework of they know what they're doing, look at it through that eyes, it's much clearer.
Yeah. I don't get the chance to sit down with Fed members that often, but I've had the chance to sit down with a lot of members of central banks in Europe, and they know what they're doing. But of course, when you address the public, you have to do it in officialese, right? So they'll never admit to it straightforward as we're chatting about it here, but they know what's going on, of course. And of course, they do also track these, private liquidity mechanisms very closely, and their staff is on top of what's going on in the private banking system and the commercial banking system, no doubt about it.
I never forget my best ever central bank meeting was with the Swiss National Bank. And it was when I was still at GLG back in the day. And we were talking about deflation and the issues we're facing. And they're like, the best thing about being the Swiss is like, we know what's going on. We're behind every closed door in every meeting. We're too small to matter, so we can do anything we want. And then if you take that bit of information, and it took me a long time to understand this, is everyone's like, what the fuck are the Swiss National Bank buying equities for? Particularly tech equities.
Yes.
When everybody else is doing different stuff with their reserves, but they're buying tech equity when they were printing money. And what they were doing was counteracting the debasement of currency, doing the trade that we're all doing now, well before we even understood it. They understood it straight off and bought equity, and nobody understood what they were doing, but they've done brilliantly, and it's kept the Swiss franc quite strong because of it.
But Raoul, I actually had an interesting observation this week. You know the guy Mohammed El-Erian, very known economist, right? So he tweeted on X that I think it was JP Morgan and another big investment bank in the US now label the gold and Bitcoin trade the debasement trade. Yeah,
saw that.
It took them, I don't know, 2 or 3 years to get there, but it's actually quite interesting because that probably leads us to the part of the cycle where the broad participation will gain speed. We'll see advisors, slowly but surely sending money in that direction, etc. So I think it's a really, really interesting juncture when these banks start to admit to the trade.
I wrote about this on X recently. I'm like, it's amazing because I went and searched via Grok or whatever to go and find any use of the word debasement by any media. There was none.
Raoul calls this the fastest adoption curve of any investable asset in human history. By the end of 2025, he projects over 1.1 billion active crypto wallets, a pace of growth that's nearly impossible to grasp. He believes this marks the greatest wealth expansion ever seen. After years of research, his conclusion is clear. Liquidity drives everything, and crypto stands to be the best performing asset class of all. According to Pal, every indicator is lining up for a period of explosive, parabolic gains across the crypto market. The stage is set, momentum is building, and the next phase of crypto growth may already be here. Don't forget to like, subscribe, and stay tuned for more market insights.